let's put the spotlight on Zensar Tech. This was too also one of the earnings candidates. So let's take the discussion forward and find the way ahead for the company. And joining us right now is Mr. Manish Tandon, MD and CEO of Zensar Technologies. Hi, very good morning, Mr. Tandon, and thank you so much for your time. First up, when we see your numbers, your constant currency growth came in at almost 1%, is what we have seen. Help us understand that what were the factors behind this growth that helped you maintain this momentum despite the broader global market uncertainties that we are seeing right now?
Well, I think first of all, Q3 is traditionally a very weak quarter for the industry, and I think we did well there. We had strong order bookings going into Q4, and which helped us navigate this uncertainty to some extent. Although we did see some right shifting demand towards the end of Q4, but still the strong order bookings were enough to see us through what turned out to be a very difficult quarter for the industry.
Right. Let's talk about your EBIT margins though, because they've improved slightly, almost flat this quarter. What were the reasons for the steady margins?
Well, I think it's all both on revenue and on margins. It's all about execution. And I think uh, one reason of margins being steady and is primarily because we maintained our utilization levels very well. Going into the quarter, we were expecting uh, better demand than what turned out, but thanks to our execution, we were smart enough to make sure that we do the hiring in line with the demand rather than invest in the hiring upfront.
So, with a net cash balance of nearly $300 million, how are you thinking about capital allocation and what are the plans?
So first of all, I don't know if you noticed or not, but we increased our dividends to make sure that the benefit of the increased cash balance is also delivered to the shareholders. We have actually, the board has actually um, defined a dividend policy which says that 40 to 50% of PAT, up to 40 to 50% of between 40 to 50% of PAT, consolidated PAT, will be given out as dividends, subject to, force majeure and some other considerations. So that is one use of the cash, and the second use of the cash is going to be to see if we can find attractive assets to acquire.
Also, Mr. Tandon, when we see your US growth, that has been a bit modest sequentially, but Europe has definitely outperformed. We see a strong momentum there. What explains this outperformance there, and is it a broad-based or a concentrated in some specific sectors, the kind of growth that we are witnessing?
Well, I think US is drawn into tariff uncertainty quite a lot, while Europe A doesn't have that uncertainty. B, if you would have noticed that a lot of the large European economies have started spending much more, specifically on defense-related thing, and that percolates down to the broader industry. So I do believe that we will do well in Europe, given the macro environment that we are seeing there as compared to the US.
Right. Manish, banking and financial services and the TMT verticals, they've also reported a healthy sequential growth. Are you seeing signs of tech spending picking up in these sectors? And on the flip side, what about manufacturing and healthcare? Because they've seen a revenue decline. So tell me what's causing the softness and what's the visibility going forward?
So I think don't read sequentially, don't read too much into it, the numbers, because TMT The growth has been primarily because there were Q3 has a lot of furloughs and Q4 benefits. So there is some sequential growth that you see there. As far as MCS is concerned, we were coming off a blockbuster uh, Q3, where sequentially we grew, I think, 6.5 or 7%. So there is some amount of pullback that we are seeing there to normalize the situation. Healthcare and life sciences, again, the new administration has and DOGE has taken a lot of steps to manage the healthcare costs. And your viewers may not know, but typically about in the US, 51% of the healthcare spending is done by the government. So there has been a little bit of muted response in the healthcare life sciences sector. But that said, it's overall a defensive sector. You know, irrespective of the tariffs and prices, if you fall ill, you have to go to the hospital. So we are. I'm not too concerned about that.
You reported some interesting wins across infrastructure segment, AI-based solutions and cloud transformation. Could you highlight one or two deals that you believe could have become significant growth drivers in FY26?
I think the deal that I would highlight, we already made a press release about that that deal. This was for Tesco Insurance and Money Services. This is a very unique deal where we are setting up greenfield operations. This was a divestment operation where a company was split into two. And for one of the companies, we are setting up a totally greenfield environment uh, on infrastructure, the contact center, and in several places for them. So that's a very encouraging deal for us because that, in a sense, shows that our strength in the infrastructure management space, not only in keeping the lights on and running infrastructure, but also establishing greenfield infrastructure.
All right, Mr. Tandon, with this, we let you go on that. Thank you so much for taking the time out and speaking with us.
If you like this video, then like, share and subscribe to ET Now.